Welcome, friends. Good morning. Welcome to the next discussions on economics for everyone, measuring economic activity. So, what are we talking about? We have been discussing about in our economics for everyone seal. As you are aware, the various economic concepts which form the foundation of economics. We also discussed about various economic systems govern how the economic works, how the economy works. In fact, we have talked about and discuss what is economic activity. Now, the question comes, how do we measure this economic? It's like you are measuring the performance of an organization, measuring the performance of an, let us say, automobile. We need to understand how efficiently an economy performs. And there has been a lot of debate and discussions in the field of economics by experts. And over a period of time, they have come to, there have been a lot of ideas which have been generated. Basically, we are talking about, when you talk about measuring economic activities, all about measuring the performance of the activities which happen in the sector of income and expenditure, what we discussed earlier. To a larger extent, after so much of deliberation, to start with one of the major measurements which was broadly agreed by many economists, they found as a useful tool to measure the economic activity was what we call as the national income issue. So let us now discuss today, start with the discussions of national income measurement. What do you understand by the term national? Significance of national income. One of the most significant measurement of economic growth is national income. National income can be readily looked upon as an important yardstick of the overall performance of the whole economy. In the same way as any business enterprise needs certain type of accounts to measure and evaluate its performance. So how do we, it represents the aggregate income of a nation as against the income of an individual. Start with. Now there are many things which comes across this whole thing. Let us discuss one by one the whole idea. We know that the modern economy is enormously complex, involving innumerable transactions of a wide variety of goods and services. To understand, analyze, and regulate the behavior of such an economy, we obviously need some indicators or measures of its performance in almost the same way as any business enterprise needs certain types of accounts to measure and evaluate its performance. So national income can be readily looked upon as an important yardstick of the overall performance of the whole economy. National income is one of the most commonly used economic phrases, and from that viewpoint, it appears to have a fairly simple meaning. It represents the aggregate income of a nation as against the income of an individual. A number of specific problems, as I discussed, or issues arise when we try to define and measure national income of any country. So how to begin with, we may define national income as an aggregate money value of annual flow of final goods and services in the national economy. I repeat it. However, to begin with, we may define national income as the aggregate money value of the annual flow of final goods and services in the national economy. Okay, so that's to start with. We talk about, so let us go to the next thing. So we define, to begin with, we define national income as the aggregate money value of the annual flow of final goods and service in national economy. So what are the issues? A number of specific problems arise when you try to define and measure the national income of the country. Some aspects of this definition need special mention. Okay. Let us discuss this. So it may be, for instance, it may be noted that national income is an aggregative value It makes use of the value determined by the measuring rod of money as a common denominator for the purpose of aggregating the diverse outputs resulting from different types of economic activity. And similarly, as we discussed earlier, national income is a flow concept. It represents a given amount of aggregate production per unit of time, conventionally represented by 1 year. Thus, national income usually represents a particular year and indicates aggregate money value of the flow of output during that year. Thus, national income usually represents and relates to a specific year and indicates the aggregate money value of flow of output during that year. Now, another aspect of this should be noted is that national income represents the aggregate value of final products rather than the total value of all kinds of products produced in the economy. So it's aggregate value, not the total value. The distinction arises because there are a number of products which in turn are used in the production of several other products. The output of the latter will therefore include as its components the entire output of the former. I repeat, the distinction between aggregate and total value comes because there are a number of products which in turn are used in the production of several other products. So the output of the latter will therefore include as its component the entire output of the farm products, inputs as raw material. For instance, since flour is used in making bread, the total value of bread includes the value of flour also. Hence, if we add the value of farmer to the latter while measuring the national income, we will be indulging in what economists call as the double counting. Obviously, the measure of national income should be free from double counting. To emphasize this aspect, the word final has been used in definition to specify the type of goods and services, the values of which are to be aggregated to derive national income. It indicates national income is an unduplicated total that does not involve any double count. Repeat, to emphasize this factor of avoiding double counting, the word final has been used in the definition of national income to specify the types of goods and services, the values of which are to be aggregated to derive national income. It indicates that national income is an unduplicated total that does not involve any double counting. Okay, so that we need to keep in mind. We talked about the flour and the wheat, so that I hope you remember this to understand the aspects of what do you call it as double counting, because some of them are what you call it as intermediate goods, goods used up entirely in the production of final goods. And so in that concept process, we also discuss what you call when you remove the value, the intermediate, if you added already, then we talk about what the concept of value added concept. That's what we have to say. Thus, the term final goods and services in national income measurement, they say GDP, refers to the goods and services produced for final use. Whereas intermediate goods are produced by one firm for use in further processing by another firm. Okay, basically raw materials. That's what we are talking about. Okay, so just to begin with, we'll start with the definition of national income as we discussed earlier, as the aggregate money value of the annual flow of final goods and services in an economy. Okay, so that's the starting. Thank you very much. We'll meet in the next discussions. We'll continue with this topic of discussion. Thank you.